3, 2, 1.
Alrighty.
Welcome to the show.
Welcome to the show. Middle of April. Excellent.
Middle of April, and we were just sitting here working out the logistics for the Army-Navy game in December.
It's going to be fantastic.
It is. If any folks are Army-Navy fans of the whole Army-Navy game, which if you're not, you're just not American.
You're missing America's game if you're not an Army-Navy fan.
But you don't have to be from Army or Navy to enjoy the game. But anyway, it's going to be in Boston this year. Well, Foxborough.
Gillette Stadium.
Where the Patriots play.
Yay.
But anyway, the sports stuff. We're not huge sports fanatics.
No, not huge. Yeah, I was at NCAA Gymnastics Championships this weekend.
Yeah.
That was pretty awesome.
Yeah.
Yeah.
Because you were a big gymnast.
You were gymnasty. Back in the day. My high school coach's last kid, before he retired, the last kid that he trained, he's a freshman at Michigan. He just won the all-around men's NCAA Gymnastics Championship. So that's crazy. It's insane. I mean, he's obviously a great gymnast. He will probably be almost definitely, unless he really, really blows something between now and next year, he'll be on the Olympic team in 24 in Paris.
That'd be cool. Yeah. I always like it when, I don't know this kid, right?
Yeah.
But there's a connection, and now I got somebody to root for.
Yeah. Right.
Like when I was watching the March Madness. I don't really pay attention to college basketball, although I grew up in North Carolina and it's like a religion there. I just really wasn't into it. But there were some kids on the Miami team that were from Purcellville, Virginia, which is where, our area. And so it was cool. I was rooting for them, right? I didn't care anything about Miami, but it's nice to have a connection, right? Yeah. And so those of you listening to this, when the Olympics come up, you can be like, hey, this is Jerry's kid, the guy, the thing.
Yeah. Excellent. So
it's
watch
nice to have somebody to root for.
Yeah, watch the gymnastics when it comes out in 24 in Paris.
First of all, we need more viewers.
Yeah.
For gymnastics.
For sure. Good Lord, gymnastics is going down the tubes.
It's hurting, man. I noticed it's just so few colleges now that have gymnastics. Yeah. And the ones that do, it's hard getting people to turn out.
They were 55, 56 something D1 programs when I was at Navy. I think there's 14 now. Men's. Wow. It's crazy. Yeah.
Man. Yeah. Well, what happened in the market this past week?
The market seems like a while ago. It was a pretty crazy week.
Yeah, we both have been traveling all week, and so we're actually recording this at the last minute on Sunday.
Yeah.
So when you guys see this in a few hours, this is one of the few times that it's pretty recent. Pretty
much live,
Yeah, because I was traveling all week, and Jerry was traveling through the weekend.
Yeah. All right, so 16 April 2023. Okay. So we're going to talk about relative strength indicator, definitely our favorite tool to use to identify or anticipate market tops and bottoms. And really what it is RSI versus price. So the divergence between RSI and price. So that means when RSI is going up and price is going down or vice versa, that's a divergence. And we'll talk about that. And I'm going to do examples of the primary highs and lows from the 2000 top to the October 2022 bottom. And then we had a special request for us to take a look at Palantir, which ticker symbol is PLTR. So I got a weekly and a daily chart on that, and then we'll look at the TSP fund charts. All right, so relative strength indicator. So RSI, it's kind of weird. I always wonder why they don't just they call it relative strength index in Investopedia. So this is a good link. There's a lot more in there than what I'm going to go over here. So relative strength index, RSI, it's a momentum indicator, obviously used in technical analysis. It measures the speed and magnitude of a security's, or in our case, the fund, recent price changes, okay, to evaluate whether it's overvalued or undervalued. And that's really what you want to know, okay? It's displayed as an oscillator from 0 to 100. So our buy trigger is when RSI, part of our buy trigger is when RSI is rising, going up through the 50 line, right? So it's on a line between 0 and 100. RSI can do more than point to overbought and oversold. It can indicate that securities, the fund, may be primed for a trend reversal, which is what we want to know, right? Or a corrective pullback. It signals because of that when to buy or sell. Traditionally, RSI reading of above 70 indicates overbought, and below 30 indicates oversold. And we're going to kind of talk about that in a minute. All right. So how does it work? It's a momentum indicator. Relative strength index compares a security's strength on days when prices go up to its strength on days when prices go down. Okay. That's really how you want to think about it. It compares the security's strength on days when prices go up and strength on days when prices go down. Relating the results of this comparison to price action can give traders an idea of how a security may perform. RSI is used in conjunction with other technical indicators to help traders make better informed decisions. RSI is a big part of our trading stack, but it's not the only thing that we use, but it's a big one. So how do you interpret it? During trends, RSI readings may fall into a broad range. During an uptrend, RSI tends to stay above 30, and it should hit 70, which is the top of the range, frequently when the overall market's in a bull market. In a downtrend, it's rare to see RSI exceed 70, right? So RSI gets above 70 when we have these bear market rallies, but generally speaking, in a bear market, you're not going to get up to 70. When you're in a bear market, you are frequently at 30 or below. So those are kind of the guidelines. This is kind of a big one. Do not confuse RSI with relative strength. So even though RSI is called the relative strength indicator, relative strength usually means you're comparing, in our case, a fund to something else. And we do that quite a bit, right? So if we say, how does the I fund compare to the C fund? That's relative.
Yeah, it's one fund relative to another, or one asset relative to another.
Right. This is not that. The relative strength index is.
I think the key word is strength in that, not relative. Sure. Right. So if you think relative first, you think this relative to some other thing, but it's the relative strength
of that index or security.
That's why it's a momentum indicator, because it's the strength of it. It's like how strong is the momentum for this thing.
Yep,
right?
100%. Yeah. Yep. So it's really, people get confused, understandably, because the words are the same, but the meaning is much different. Okay. The biggest thing about this for us is the RSI versus the price, and the divergence is what we're really looking at. So RSI divergence occurs when price moves in the opposite direction of RSI, right? So in other words, a chart might display a change in momentum before corresponding change in price, which is what we want to know. Because if momentum is weakening, even though price is still rising, then we're anticipating a top. If price is falling, but momentum is strengthening, then we're anticipating a bottom, right? So a bullish divergence occurs when RSI displays an oversold reading, right? So RSI is really low, but then it puts in a higher low, right? But price is putting in a lower low. So it's that divergence, right? And when we see that, it's called a bullish divergence, because as price continues down, when RSI is going higher, it's anticipating a bottom or a bullish divergence. And then the reverse is a bearish divergence. It's when RSI creates an overbought reading followed by a lower high that appears with a higher high in price. So it's just the opposite. And we're going to do plenty of examples. The difference between RSI and MACD. So I put this screenshot, this piece of it, and all of this was from this Investopedia link. So definitely go back. There's a lot of good information in that Investopedia link. MACD is another momentum indicator, but it's different from RSI. So MACD shows the relationship between two moving averages of the security's price. If you want to learn more about the calculation and how they do it, definitely go to that link. RSI is designed to indicate whether a security is overbought or oversold in relation to its own recent price levels. Okay, that's what it's comparing, right? Like we said, it's not comparing to some other index or whatever. It's comparing to itself. as opposed to MACD, which measures the relationships between two exponential moving averages. Okay, so MACD is relating two exponential moving average lines. RSI measures price change in relation to recent price highs and lows of that security. I know that probably went over people's heads, but at the end of the day, the examples are what kind of matters.
Yeah.
Right? So if you really want to dig into the nerdiness of it, that's the link right there. But here's what really matters. So if we look at examples from the 2000 top to the 2022 bottom. So here we are in 1999. The market's running up. We have a high. We have a higher high in price. At the same time, we have a high in RSI on this high in price, but RSI is declining here as price is moving higher. Okay? That's the divergence that we're talking about. When price moves higher and RSI moves lower, you're anticipating a market top. Okay, that's one tool. You're anticipating that top. And in this case, we're back here in September 99. We have a bottom, right? Price keeps moving higher. We have higher highs, higher lows. We're in an uptrend. But RSI is pulling back. So we're anticipating a top. So we have this channel. And as soon as price breaks below that channel, that's a second huge indicator, right? We have a divergence in RSI and price. And then price just broke down through that channel line. If that's not a sell signal, I don't know what is, right? And that's getting you out at the top of that tech collapse in 2020. Okay. And then the bottom, when are you going to get back in? So here we are in 2002. This is a weekly chart. So the wick, this piece right here, this is as far down as price went in that week. Okay. So we had a low in price within the week here, and we had that low in RSI. Price rallies for a few weeks, comes down for a few weeks, gets lower than this low, but the RSI is higher than it was back here. So it's a divergence in the other direction. It's a bullish divergence. Okay, and then obviously we had this huge candle follow through. So when you see the price continuing lower, as RSI is moving higher, you're anticipating a bottom. And then you get that confirmation when price blows through. So that's how you got back in at the bottom in 2022. 2002. All right, so fast forward to, here's this 2008. They're not always really obvious, right? I mean, it's obvious. Like price obviously put in a higher high here in 2008 at the top than the prior high. And we get a little bit of a divergence here. It's not a lot, right? So it's a tool. So we there is some divergence there. But then again, when you add it to other technical indicators, a trend line is a good one. When it breaks down, the odds of it going lower are very high, right? So that's the top in 2008. And the bottom in 2009, we had a low here, a little bit recovery rally. We had a really low RSI. Recovery rally comes down, new lows in price, but we did not get a new low in RSI, right? And then we have an explosive move higher on the other side of that. It's a really, really good indicator for calling major tops and bottoms. It doesn't have to be, 2008 level tops and bottoms. It can be like this one. Here's 2011, right? We have higher highs and lower highs in RSI, and the market rolls over. Not a huge rollover, but it rolls over, right? And then eventually it bottoms. We have a low in price, a lower low, but RSI is increasing, right? And then we have a huge candle that said, hey, we're back in a bull market. 2018. Is that 2018? I can't even see that. Hold on. 2016. All right. Same kind of thing.
Got to zoom in a lot.
Yeah, the way I'm looking at this on the computer is brutal. I need bigger glasses. All right. So we have prices just incrementally moving higher, but RSI is incrementally moving lower. And then obviously, once this big candle down, if you didn't get out before then, this is on a weekly chart, but that was definitely your indication that it was time to get out. And then this was a kind of a big one. We had a low, a lower low, a low in RSI, and a higher low in RSI. So pretty good divergence there. You could have drawn this trend line and got back in anywhere in here, and you're in good shape. So you're really anticipating the tops, anticipating the bottoms. You need a confirmation, right? You need a confirmation candle to confirm the trend change, but it's just a really good tool to anticipate that it's coming. Here was 2018. It doesn't work all the time. So in this part of 2018, there is no divergence, right? RSI just tanked along with price. And then we don't get much of anything here as price kind of moves around there. So it didn't happen here. We didn't get a divergence. But then later in 2018, price is still moving higher, and RSI is moving lower in this small time frame right here. And then we had that crash into 2018, into the end of the year in 2018. COVID, we call this COVID, but there was actually a lot more going on in the market. We would have had a recession had we not had COVID. We'd have had a recession anyway. But price was moving higher, and RSI clearly is moving lower. This is a really good divergence pre-COVID going into it. And we were looking at that, and if you were a subscriber back then, we got out during that week. So we avoided this entire drawdown. And then into today. So 2022 is another great example. It was as clear as COVID. Price is coming up, RSI is going down, and it's a weekly chart. So you drew that trend line, and at a worst case, you got out on that week, right? And then most recently, we had a low here in the summer, and 2022, and then we had the low in October, but we had higher RSI in October than we did in the June low. And so that kind of was telling us that there's a good possibility that we're going to get a rally out of that October bottom. And obviously that's what we got. And it's still going. So hopefully that gives you guys an idea of how to use RSI as a tool. It's definitely my favorite tool in the toolbox. It's not the only one. You have to have things that confirm it, but it's a really good one for anticipating. And so you would use that to manage downside risk. If you're seeing RSI roll over as price keeps moving higher, you're looking for a reason to get out.
Right.
And the same thing on the other side.
It's giving you a heads up that the momentum is shifting.
Right.
That's the whole idea.
The market participants are seeing this and they're going, I don't like it.
Right.
And it's like driving a car. Like you're driving 100 miles an hour. You can't go from 100 to minus 100. You have to slow down, and then you stop, and then you start going backwards. And it's the same kind of idea. The market doesn't flip on a dime.
Right. The momentum is shifting, yep. And therefore you want to be looking for another reason, which could be another indicator, another set of indicators that says, hey, this is enough for me to go, I'm getting out or getting in. Right. Either way.
So the interesting thing is you have to block out the news, because if you go back to this chart right here, this was going into 2022, right? Price was moving higher, right? We had a low, we had a big rally, and we're kind of consolidating, but price is moving higher, and there's no reason to believe that there's a problem in January 2022. But if you watch it on RSI is declining as price is moving higher. So something's going on. And you might let it play out a little bit, right? So maybe you didn't get out on that week, but that week, there might probably the news is saying, oh, don't worry about it. It's a buy the dip opportunity. But you can see in RSI, it's not. It's a time to kind of manage risk and wait for a better opportunity to get back into the stock funds. Okay. So we had a special request for Palantir, which is basically a data analytics company that services CIA and other three-letter agencies.
You can't say that out loud.
Apparently, after this weekend, you can say anything out loud.
Say anything you want
Lord,
to.
some 21-year-old kid on
Don't even get me
Cape
started.
Cod.
Don't even get me started. Yeah, I mean, I could go a whole because I came from the Intel world.
Yeah. Wow.
And
just wow.
There's a whole lot of things about to make you want to go wow.
Yeah.
That we've let. Anyway, we get all. This will turn political, which is not political. It's policy driven.
Yeah,
but
I would hate to be that guy's lieutenant.
Everybody,
or his commanding officer, or all the way up the chain.
All the peoples.
Yeah.
All the peoples don't want to be anywhere near that kid right now.
All right, so Palantir. Palantir goes public back here in October 2020. Big run up, which is great. So this first chart is a weekly chart. Okay, so there's not much you can do unless you are a pre-IPO qualified investor, and you can buy shares back in here before the IPO happens, and then it runs up and you make a ton of money. That's generally not where we are. It's not where we are between the two of us, but it's not where most of us are as government employees. So you get a big run up in Palantir, pulls back, consolidates, but it pulls back, and then it does this ABC, which is a two wave. Then we have a 3, a 4, and a 5, and we put in a bottom in December 2022. The 20-week moving average line works really well, right? Every time we get below it after that breakdown from the 2 wave, we get resistance, resistance, resistance until we get back above it, right? So we counted a 5 wave, 1, 2, 3, 4, 5. So Elliott wave, we're anticipating a bottom here. You got MACD has already started to move back up from way back here, so that's good. Means that some of the momentum is coming back into the stock. And then RSI is staying above this 30 line, even as the wave 5 is coming down. So it's anticipating a bottom here, right? Doesn't mean you should buy it. It just means keep it on your radar. Then it broke above that 20-week moving average line back here, and has been consolidating since the beginning of the year, really, since February. And then this week had a pretty good breakout right at that 20-week moving average line. And RSI gets above 50, and MACD is just barely negative. What is that? Minus 0.02. So it's basically getting ready to cross to the upside. So on a weekly chart, given the Elliott waves and the technical indicators, Palantir is looking really good. On a daily chart, one more thing I wanted to point out. This is a logarithmic chart, okay? You can see that price had gone from, it opened at $10 a share, right? And it went all the way up to 45 a share. So if we looked at this on a regular chart, it would basically be a spike up and a spike down, and it doesn't really tell us a whole lot. But if you look at it on a logarithmic scale, it tells you a lot. If we go to a daily chart, it's very tough. So now the blue line is a 20-day moving average line, but it bisects all of this. It's not a useful moving average on a daily basis for Palantir. And say it's $8 a share right here, which is, relatively recently was $8 a share. So 8 cents is a 1% move. So the dollar value doesn't matter. It matters the percentage value. So if it goes from, $8 a share here to $10 a share up here, it's a 20% move. So you can see basically that every day you have huge moves in price. So if you're going to buy it based on the weekly chart, that's fine, right? You got a 1, 2, 3, 4, 5. I got my 5 Elliott waves down. I got back up above that 20-week moving average line. I buy it on a breakout. RSI is coming up. MACD is coming up. It's a good buy on a weekly basis. On a daily basis, if you're trying to trade this thing, I wouldn't do it. So if you're in it for the long term, I think you're probably doing pretty good. I would look at it on a weekly basis, weekly chart, and if it closed below that low right there, I would get out. But until then, it's in good shape. And depending on how this thing with Ukraine and everything else goes, Palantir might be a great option. So hopefully that helped for the person that asked us to take a look at Palantir.
We took a look.
Take a look. Daily chart, way too volatile for me, but on a weekly basis, it looks really good. All right, TSP fund charts. Again, blue line is the 20-week exponential moving average line. Once it got back above there after that COVID low, every time it came down, it got support, right? Every time until that week in January where it closed below it. And as we said before, we have the big divergence between price and RSI. So this down day, this down week right here was a no-brainer to get out of the C fund on a weekly basis. And so where are we right now? Here was the October low. We've been kind of oscillating on a weekly basis around that 20-week moving average line, right? And the line itself is basically flat. So you want the line to curve up, right? And as long as price is above that line, the line will start to turn back up. So there's a buy sig trigger in place, right? That happened 2 weeks ago on a weekly basis. When we got above that 20-week moving average line, RSI had been above 50 and MACD had crossed positive. So it supports price going higher from here on a weekly basis. S fund doesn't look as good, right? Let me zoom in here. You can see this week, price came up, hit that 20-week moving average line, and was rejected from it, right? That's not what you want to see. You want to see price go up through there. And for the past 3 weeks, it hasn't been able to get above that 20-week moving average line, right? So it's hitting 3 weeks in a row. It's hitting resistance there. Definitely not what you want to see. RSI had been declining, right? It's starting to level out, but it's still below 50, and MACD is rolled over. It's not dropping, but it's S fund is not looking very strong right now is the bottom line. It's not horrible, but it's not very strong. I fund, clearly the best fund of the stock funds since this October low. It's rallied, significantly more than the other two stock funds. 76. If it gets up to the 76 level, that is the 78.6 Fibonacci retracement level of this entire move. So if the I fund continues higher, 76 is a really, really good target. And you got RSI moving higher, and you want to see what happens relative to that high in RSI. Because if price keeps moving higher and RSI can't get above this high, then you have a divergence. And you're anticipating a rollover, and a really good place to roll over is a Fibonacci number, which the next one is $76, and it's the 78.6 retracement level on Fibonacci's. F fund is confounding everybody. The idea was that the stock funds tank in the first half of the year. That's what everybody thought was going to happen, and we have a big recovery in the second half. And when stocks tank, not all the time, but the idea was at this time, it's going to be a big rollover in stocks, and people would flee to the safety of bonds, and so bonds would go up, stocks would go down. They've been talking about that for a year. It hasn't happened yet.
Yeah.
And there's no indication on this chart that it's going to happen anytime soon. You can kind of see, stocks had gone down along with bonds. So this is the F fund. Bonds are going down. Stocks were going down to that October low. Stocks have been rallying and bonds have been rallying. So they're basically moving in lockstep.
Which is just not normal.
It's not normal at all.
Yeah.
No. And so what we're kind of anticipating is that stocks go down, bonds go up. The problem here is that, first thing I would say, this is the top in 2020 of bonds. So you got 1, 2, I'm going to say 3, 4, 5. Like that's my primary count on the F fund right now. If you think that we're going to go higher from here, then the count is 1, 2, 3, 4, 5, and we put in a bottom here, and you got a 1 A, B, C for a 2, and this should keep going. So that's my alternate count, and it's possible. I'm just not buying it right now, and there's no indication in this chart that that's what's happening. You get RSI rolling over, MACD, not great. This is a weekly chart. Again, on the daily, it looks worse. But anyway, things
not a lot of reasons to be in the F fund, first of all.
No, things just aren't happening the way everybody anticipated that they would. And the beauty of technical analysis is that you can listen to all the different reasons why things should happen in the future, and you look at a chart and go, okay, I hear what you're saying, I hear what you're saying, I hear what you're saying, and I can see what's actually happening.
Right.
And then you can say, well, based on what I'm seeing is actually happening, what are my options for real going forward? I understand your argument, but what is actually happening happens in the price, in the chart.
Yeah, and what I've come to appreciate about technical analysis that I didn't so much, early on in this journey is once you can wrap your head around, because for me, technical analysis, early on, it was all technical. I know that sounds redundant, but it was all like, it was math, and it was, just like hard stuff. Unless you're like a really, deep analytical math person, it's hard to wrap your head around. But if you back up a couple of steps and go, no, okay, it's actually, it is math, right? Mm-hmm. It is technical, but what it is showing patterns of behavior of humans.
Yeah, right.
Then it all starts to make sense to me, because I'm like, oh, well, one of the things that I've learned over many, many years of analyzing humans is that we always
operate in patterns.
We always do, right? So, Jerry and I come from a law enforcement background. I did a lot of intel work in the military. Jerry's been an analyst in the market. Like, once you can start to see, there is, like, without a doubt, right? Yep. There are patterns in patterns within patterns, and that's how, like, you can anticipate what people are going to do, because whether we like it or not, and how hard we try, throughout the day, we always kind of operate in patterns, and definitely over time, over a long time. And so anyway, I say all that to say that, like, that's what helped me kind of wrap my head around, like, all of this stuff that Jerry's talking about with the momentum indicator and what it is these things have, we've allowed ourselves to be able to use math, right, to kind of calculate all of these sort of behavioral patterns. And that I can easily wrap my head around, right? Yep. And like, okay, well, you can do that. I know we do it. We do it to catch bad guys. Right. So I know we can do it in the market, because the market is people. Yes, there's large institutions, but they're also run by people. So anyway, I think, for those that have listening to the podcasts and are just kind of like, every once in a while, just kind of zone out and like, I don't get it. Just like when you see these charts and you start seeing these indicators, think to yourself, like, I sometimes look at these as sort of like, the blips on a person's like heart monitor or something. Sure. Like, that's not a great analogy, but it's kind of the same thing. It's like watching this stuff kind of blip along, and you're like, oh, well, because, as we know, there's two extremes within the market. There's fear and there's greed. And then there's a lot in between, and it's usually moving in between one and the other. Yep. Right. And so when there's confusion and, minor chaos, what you usually see is what we're seeing right now.
We call it volatility.
Right. Yeah. It's just kind of bouncing around, and, it's a correction, but it's an ongoing correction. It's like, what are we doing here? And that's how I kind of look at this whole bond versus, stocks. And it's like, because we're all just confused. And part of it is because we're listening to all the stuff. Yeah. But to Jerry's point, the greatest way to kind of filter through all that is just look and see what it's doing.
Right.
Right. So if everybody tells you that, let's say you're a farmer and you're growing corn, and everybody says it's going to be a bad year for corn because it's not going to rain, and then all of a sudden it does rain and you have a great crop. Yeah. Are you going to believe the people that are talking to you, or are you going to look outside, look up
the sky,
look at the corn, look at the rain, and go, oh, I'm getting, like, it may be a crazy analogy, but I think of it that way. It's like, no, just, you can listen to all of the noise. But at the end of the day, if you go to, these charts and you kind of learn how to interpret this, it speaks to you and says, oh, regardless of what everybody says is the reason, right, this is what's happening.
Right. Right. The cool thing about this chart, and they're all kind of the same at this point, but as long as we're below this blue line, price is moving lower. Now, if you're trying to catch, like, these rallies, it's very difficult. And it's not worth really doing for us. But once we get above this line, you can see, like Conan's talking about, it's right now there's a lot of confusion.
It's just churning.
It's churning along that line. So the market's trying to decide, am I going to go this way or am I going to go that way? And you can listen to people and they'll tell you, oh no, definitely for all these reasons, it's going to go this way. And you can flip the YouTube channel and for all these reasons, it's going to go that way. and so my thing is, number one, we're churning along the line. That's a whole lot better than where we were here below the line, right?
Right.
So now you're just looking at, now that you know.
It's kind of a waiting game, right?
It is, yeah. And there's no need for us in TSP to anticipate it. It'd be great if you could get in at the bottom. But I would rather get in once I identify, I'm like, okay, I'm pretty sure the trend is going higher from here. Now I'm going to get in.
Right. Yeah. And if we didn't have the rules, if we didn't have the restrictions that we have, it'd be a totally different conversation. Yeah. But in our world, that's a very difficult thing to play. And the biggest takeaway for those of you that are listening is you can't look at that churn day to day, week to week, and just mull on it. You can't get sucked into that. Yep. What you do is you just kind of sit back and watch. And hopefully you're watching us and others that are talking about this and going, okay, this will help me make my decisions.
So just the F fund. I mean, there's so much talk about bonds, right? We got above that 20-week moving average line back here in November of last year. And we've basically, the price is the same as it was in November of last year.
Just kind of
how much news? How many Fed announcements? How much inflation up and down and CPI and PPI and all the rest of it has happened and that's supposed to affect the bond market. And on a day-to-day, week-to-week basis, it does affect it. It goes up and down. But nothing has materially changed.
Yeah, and that's not even like a yearly basis. That's just a few months.
Right. I mean, from November but it's a pretty November, December, January, February, March, April. I mean, 6 months.
Yeah, my point is like if you were in it or out of it either way, you would have been the same.
Yeah.
Right. And so all the talk in the world doesn't make that change. You just need to be on the lookout for it. All right. Questions. That's the one I need.
All right.
If you guys have any questions, put them in the comment section where you found the video. If there's not a comment section, just send us an email.
Yeah, and we got to hurry up and get this thing up because it's getting late.
Bada bang. All right. Hope you guys had a great week. Hope you have a great week coming up. And we are out of here.
Oh, that's